The rise of Stratton Oakmont. In the late 1980s, Jordon Belfort, a young and ambitious stockbroker, saw an opportunity to make it big on Wall Street. After a brief stint at a reputable brokerage firm, he realized the world of finance was full of untapped potential for those willing to take risks and bend the rules. Belfort founded Stratton Oakmont in 1989, a brokerage firm that would become notorious for its aggressive tactics and unscrupulous business practices. At first glance, Stratton Oakmont appeared to be a legitimate firm, offering stocks to investors. However, it was anything but. The company employed a pump and dump strategy, a method of stock market manipulation designed to make Belfort and his colleagues obscene amounts of money at the expense of unsuspecting investors. The pump and dump scheme. Belfort's scam was simple yet effective. Manipulate the price of cheap, illiquid stocks and then sell them off at a high price, making millions in the process. Here's how it worked. Pump. Stratton Oakmont would purchase large amounts of a small, low-value stock, often from struggling or unknown companies, and artificially inflate its price. This was done by using aggressive, high-pressure sales tactics. Brokers at Stratton Oakmont would cold call potential investors, using persuasive scripts to get them to buy the stock. The more people they could convince to buy, the more the price of the stock would rise. Dump. Once the stock price had been artificially inflated, Belfort and his colleagues would sell off their own shares at the inflated price, reaping huge profits. After they sold, the stock price would crash, and the investors who had bought the stock at its peak were left holding worthless shares. This scam was repeated on a massive scale, with Stratton Oakmont involved in hundreds of stocks, living the high risk. As Stratton Oakmont flourished, so did the lifestyle of its employees. The firm's success on paper was phenomenal, but it was built on lies and deceit. Belfort and his colleagues reveled in the wealth they generated, spending money extravagantly on luxury homes, expensive cars, and wild parties. Drugs, alcohol, and lavish living became the norm. Belfort himself embraced the excess, often flaunting his wealth and power. He was known for throwing outrageous parties, buying expensive gifts for himself and others, and even indulging in his own indulgent behaviors, including heavy drug use. His company became known for its wild, unrestrained culture, referred to as a bro culture, which thrived on greed, manipulation, and the thrill of quick, easy money. At Stratton Oakmont, employees were incentivized by huge commissions, and many of them were encouraged to bend ethical standards to achieve success. The firm was not just about making money, it was about making more money, no matter the cost. The fall eventually, the fraudulent activities of Stratton Oakmont caught the attention of regulatory authorities. The Securities and Exchange Commission, SEC, and the FBI launched investigations into the firm's activities. However, for years, Belfort and his team continued to operate, finding new ways to hide their fraudulent actions. They covered their tracks by using fake financial records, lying to investors, and leveraging connections in the financial world to protect their operation. But in 1999, the long arm of the law finally caught up with Belfort. After years of investigation, he was charged with securities fraud and money laundering. The SEC and FBI revealed that Stratton Oakmont had defrauded investors out of hundreds of millions of dollars. The consequences. In 2004, after pleading guilty to securities fraud and money laundering, Jordon Belfort was sentenced to 4 years in prison. He served about 22 months of that sentence, a relatively short time considering the scale of his crimes. However, he was also ordered to pay $110 million in restitution to the victims of the scam, although he never managed to pay back all of the money. While in prison, Belfort's life was gone. His luxurious lifestyle was gone, and his reputation was tarnished. But his story didn't end there. Post-prison life. After being released from prison, Jordon Belfort reinvented himself. He became a motivational speaker, using his experiences in the world of finance to teach others about the dangers of greed, unethical behavior, and the consequences of dishonesty. He also authored a memoir, The Wolf of Wall Street, which recounted his rise and fall in vivid detail. The book was later adapted into a blockbuster film starring Leonardo DiCaprio, bringing cautionary tale of how unchecked greed and corruption can bring down even the most senior